Oil was first discovered in commercial quantities in the southwest of the country in late May 1908. As a major world oil producer, Iran occupies the second position as the largest oil producer among OPEC members. It also holds 10% of the world's proven oil reserves. It has the world's second largest natural gas reserves after Russia. In 2007, Iran had over 19,000 kilometers of natural gas pipelines, 8,438 kilometers of oil pipelines, and 570 kilometers of pipelines for liquid petroleum gas, and 307 kilometers of pipelines for gas condensate. Iran's central pipeline infrastructure was designed for the distribution of natural gas for domestic use and for the domestic transit of oil, including from offshore oil fields to processing centers. That structure was subsequently supplemented as the natural gas industry and the fuel export industry expanded. Iran now pumps around 3.8 million barrels per day. Based on China's future demand growth, crude oil imports would have to double by the middle of the next decade and would exceed 10 million barrels per day by 2020. So, Iran is the second largest oil supplier of Saudi Arabia with 544,000 barrels per day, or about 6% of its supply. On 29th of October 2004, Iran and China announced the signing of a deal on Chinese investment in Iran's oil fields and the long-term sale of Iranian natural gas to China that could eventually be worth $100 billion for a 25-year period. The deal was noted to have the potential to reach 15 to 20 million tons a year, taking the total value to as much as $200 billion. In December 2007, China's Sinopec Group and the Iranian Oil Ministry signed a contract on the development of oil fields in southwestern Iran. At the end of that meeting, the Iranian Oil Minister Ghulam Hossein Nazari announced that the initial estimation of the project's cost is about $2 billion. It is important because Iran's economy has been dominated by oil exports, which in 2008 constituted 50 to 70% of government's revenue and 80% of export earnings. The rapid crude drop, which sent prices from a record high of $147 in July that year to nearly above $50, has prompted analysts to question the country's oil-dependent economy. Iran's central bank in late 2008 called on the government of President Mahmoud Ahmadinejad to increase and diversify non-oil exports in a bid to ease the country's reliance on oil revenues. Iran's economy is too dependent on oil exports, and there is no sign of China slowing or stopping buying oil from Iran. In fact, China is investing a lot of money in order to get more oil from Iran. This trade is so important for Iran's economy because oil accounts 50 to 70% of government revenue, and China is the second biggest buyer from Iran.